We got excited, Christy, about buybacks. I love buybacks too, but actually earnings are what is really important here. Yep. Those top stocks that we're talking about and outperforming year to date, yep, they had really, really strong earnings being reported. Yep. And what we're seeing, and we've seen actually during the first quarter, is a really strong dynamic of companies that have got strong earnings, quality earnings. They are the ones that have performed well, double-digit performance. We've got some of the early cyclical companies effectively calling the bottom of the market in there as well. So I think the earnings story is there to support everything. Yeah. Europe feels a little bit more stable. Yeah, we've still got these end risks. What if inflation gets out of control? What if recession does come back to haunt us? But those risks are relatively low. Geopolitical, we always have to keep an eye on. But I don't think it is buybacks that are actually fueling the market. I think it's earnings that are fueling the market.
But even if you look at some of the earnings, say some of the biggest corporate earnings that we've covered it on the show, where the profit margins are enormous. We look at IHG's numbers today, for example. They came in line with expectations, but a lot of these earnings are so dependent on what the U.S. economy is doing because of the exposure that is coming from that side of the Atlantic. This isn't necessarily indicative of European strength. Would you agree with that?
Yeah, no, I definitely would agree with that. I mean, the U.S. story is always incredibly important, and you know, we do need to just be very aware of what's happening in the US. We need to kind of just keep an eye on everything over there. China, of course, as well. Guy, you mentioned that this morning. Also an area that we have to be incredibly thoughtful and aware of. But they are risks. I mean, I'm not going to sit here and tell you with 100% certainty that the European market is going to continue to go up. However, on balance, those risks are being outweighed by the resilience and the quality of those earnings that we've been seeing coming through in the season.
But I've got to be in the right stocks.
100%.
That's the problem at the moment. And if any of those stocks falter, then I've got a big problem in my portfolio because my concentration risk is enormous. Now, you're going to tell me that they're in different sectors and therefore the risk is maybe a little bit lower than it is over in the United States, but the risk is still there. You get an issue with Novo Nordisk and it's got a manufacturing problem or whatever it turns out to be, then the risk in my portfolio is substantial, and any of those single stocks drop, I'm taking a big index hit.
I think you're taking a little bit of an index hit. I mean, there is certainly a little bit of a concentration risk on both sides of the Atlantic, and even if it's spread across sectors. But of course, I'm a fundamental stock picker, and therefore I believe that what you really need to be understanding is what is driving those returns. If you are in the right place, if you really understand the quality and the resilience of those earnings, then I think, yes, there is that risk. It's never going to be zero, but the risk is relatively minimal, especially when you do have a little bit more breadth across the sectors. There are superstars across sectors in Europe. You're not seeing that quite as much in the US. And I think that gives you a little bit more of a story, because if one of those stocks, if a healthcare stock falls, I don't think you're going to see the same read across as you're likely to see in the US if one of the names falls.